Hi everyone, my name is Zulfiqar and welcome to another episode of Income Investors. With me today is John Whitefoot, but before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as investment advice. Know that no matter how safe an investment sounds, it comes with risk. To read more about it, please see the description below. Marine stocks, like today's income pick, Euroseas Ltd, traded on NASDAQ under symbol ESEA, have for the most part been on the back burner for most investors. With potential recession on the horizon, the demand for marine shipping container ships is expected to be muted, but the long-promised recession has yet to materialize. John?
Yeah, you're exactly right, Mo. Thanks. Sure, and we could face a recession in 2023 or even early 2024, but inflation is falling, the Fed has taken a more dovish tone, the economy remains resilient, the unemployment rate is hovering near pre-pandemic levels, consumer spending remains robust, and gross domestic product growth continued in the first quarter.
These dynamics actually bode well for the broader economy, which is why it's a good idea to take a closer look at certain marine shipping stocks.
Yes, exactly. Like Euroseas, it's a marine shipping company that's been around for a century, but it only went public in 2005. The Athens, Greece-based company owns and operates dry bulk and container carrier vessels and provides seaborne transportation for dry bulk and containerized cargoes. The company also owns and operates dry bulk carriers that transports major bulks such as iron ore, coal and grains, and minor bulks such as bauxite, phosphate, and fertilizers. Overall, it has a total fleet of 18 vessels, including 10 feeder container ships. They're more medium-sized ships or vessels with an average capacity of 300 to 1,000 20-foot equivalent units, and that goes by the acronym TEU. So, and that's the length of an average container. It also owns 8 intermediate container ships. Together, Euroseas 18 container ships have cargo capacity of 58,871 TEUs, which is big, but the company's going to get a lot bigger, almost 40% bigger. After the delivery of 9 feeder container ships in 2023 and 2024, Euroseas fleet will consist of 27 vessels with a total carrying capacity of somewhere like 81,071 TEUs.
How is Euroseas stock doing these days?
Well, the marine shipping industry took a hit in the early days of the pandemic, but things quickly turned around as quarantine people started to shop at home and we still needed things. So between March 2020 lows of $1.10 per share and the company's multi-year high of $35.05 in September 2021, Euroseas stock actually ripped 3,086% higher. Euroseas stock has retraced a little from those levels, but it continues to trade above its support level near $21 per share. But thanks to a big comeback in container ship charter rates, the outlook for Euroseas stock remains bullish, with Wall Street analysts providing a 12-month share price target of between $39.50 and $49.
And I wonder why so much bullishness behind the stock.
Yeah, well, Euroseas continues to report solid financial results and provide a strong outlook. For the first quarter, ended March 31st, Euroseas announced that revenue slipped to $41.9 million. But the 7.6% decrease was mostly a result of lower time charter equivalent rates. On a per vessel basis, Euroseas vessels earned 14% lower average time charter equivalent rate, but on a per vessel per day basis, the sum of vessel operating expenses, management fees, and general administration expenses actually increased 10.2%. This resulted in first quarter net income of $28.7 million or $4.11 per share, and that's down slightly from $29.9 million or $4.15 per share in the first quarter of 2022. Now, it looks like, things are all going down, but what's important to remember with these results is you need to put it in perspective. In a market where charter rates slid significantly compared to last year, the company's net revenue and net income fell only marginally. So the outlook remains pretty solid for Euroseas.
And are there any other reasons why investors should be bullish on Euroseas?
Absolutely. During the first quarter through mid-May 2023, container ship charter rates staged a comeback of 15 to 20% compared to the low levels reached for most segments earlier. Also, during the first quarter through mid-May, Euroseas was able to recharter 2 of its vessels whose contracts expired for 2 and 3 year long charters at rates higher than originally anticipated. This reflects the resilience of the market and the idea that feeder vessels will be in short supply. Yeah, and admittedly, larger vessels establish the overall trends in the market, But the better supply dynamics for the feeder and intermediate-sized vessels should provide a certain degree of comfort for owners like Euroseas. That larger comfort lies in its charter coverage, which runs well into 2025 and amounts to about 400 million of contracted revenues. So in terms of coverage, Euroseas fleet is contracted in excess of 90% for the remainder of 2023 and in excess of 65% for 2024. Its contracted revenues alone over 2023 and 2024 are expected to generate earnings in excess of $20 per share, which will be further increased by the revenues from its yet unchartered days.
And what's happening with dividends here?
Well, after consistently paying a dividend for years, Euroseas Ltd paused its payout back in 2013, but changing industry dynamics, including increased profitability and earnings visibility, forced it to reinstate both its dividend and share price repurchase program in May 2022. At the time, management said that the company's board decided to use a small part of its contracted earnings, which did not alter its growth philosophy, to reward shareholders and declared a common stock dividend of 50 cents per share. It also initiated a $20 million share repurchase program. Yeah, Euroseas has maintained that payout level. This past May, the company's board declared a quarterly dividend of 50 cents per share, or $2 on an annual basis, for a yield of 9.5%. For comparison's sake, U.S. inflation is sitting at 4.0%. That's the lowest level of inflation since March 2021. Now, those afraid the company will suspend its dividend again can, breathe easy. The payout ratio is just 13.56%, and it has 400 million booked into 2025.
Thank you, John. To recap, Euroseas is a leading global marine shipping company with one of the lowest operating cost structure among publicly traded shipping companies. The company reported solid first quarter results and said its charter coverage runs well into 2025 with 400 million of contracted revenues. This earning visibility provides the company with long enough perspective to allow it to continue to reward investors with a reliable and ultra-high dividend. The strong industry tailwinds are also why Wall Street analysts believe Euroseas stock could more than double over the next year. That's it for today. We'll be back with another video soon. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.